This video is going to talk a little bit about what happens to the transaction price because of principal agent relationships, right? You can think of this as working on commission, right? Um, so principal is the person in charge, right? This is when we're making when we're making a sale as the principal, we're providing our own company's products and services. And when that's the case, we recognize full revenue. But, increasingly in our society, we see companies that act as an agent for the principal, right? They're providing goods and services that are not theirs, but just acting as a middleman, as a broker, if you will, to to attract buyers to the product and services that they don't own, but they're selling on the behalf of the principal. When that's the case, then the agents are only allowed to record revenue equal to the commission they charge on the sale. Only record revenue equal to the commission they charge, just the commission they charge on the sale. Right? Because the goods aren't theirs, and so the cost of goods sold isn't theirs to record. The cost of goods sold is the principals, right? They're the ones who provided the good or service at a cost to the agent. The agent is just selling it off to somebody else. So, again, from the codification, there are a lot of factors that indicate whether the agent is whether the entity is an agent, and if they are an agent, right? These are the indicators. Another party is primarily responsible for fulfilling the contract. So if I'm helping book airline flights, right, as Travelocity, Travelocity isn't providing the, never mind, I was going to say the meal on the plane, but you don't get those anymore. They're not providing the service of flying the Airbus across to a new destination. They're just selling a ticket, right? The entity does not have inventory risk before or after the goods have been ordered by the customer, right? So the inventory is never the risk and the responsibility of the agent. Basically, the inventory is always the risk and the responsibility of the principal. So that doesn't meet the idea that this person is the principal. They can't establish prices, right? They're just going based off of what the principal charges. Um, we have a form of commission, right? The entity's consideration is in the form of commission. That's very typical in principal agent relationships. And the entity, the agent or the potential agent, is not exposed to credit risk. So, the if the buyer ultimately cancels or returns um, the product or doesn't pay, it is not on the agent's shoulders to take care of that. It becomes the principal's. So, really, what we see here overall is that the risks and the benefits of ownership are never in the agent's hands. They're always between the principal and the customer, not that third party that connects the principal with the ultimate customer. So, pretty famous example about this was in the early 2000s. Priceline was reporting as if it were the principal, right? And Priceline is not the principal. They are, negotiating flights, hotels. They are the agent, right? They're connecting with hotel industries and airlines in order to sell tickets and accommodations to customers. So let's look at how that would change, right? In a quarterly report filed in the year 2000, Priceline claimed sales of 152 million. So they claimed revenues 152 million. And but really, Priceline only got a commission, a small commission on that. They only got $18 million from that amount. And so what it looks like they had as their commission percent, as I'm doing the calculation real quick, is like about 11.8% commission. So they were saying basically this was the price of the goods, the overall sales price. This is their commission amount, but they reported their commission as gross profit rather than their sales, right? This was the amount due to hotels and um, airlines. And so they, instead of recording that, as an appropriate payable, right, they debited cost of goods sold as part of this, as if they held the risks and the benefits and the performance obligation of providing people a place to stay or the Airbus to travel on. What they should have done, of course, is just recorded their commission with no cost of goods sold, and that would have been their net income. Okay, so not a very confusing piece. You just have to be careful in to ensure that the company we're recording revenue for ultimately, if we're recording the full revenues of the item, that they have the risks and the benefits and the obligation of providing the performance obligations in this contract, that they're not just a broker.